Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us from the market site in Times Square, New York City, we have Michael LaBella, Head of Global Equity Strategy over at Franklin Templeton. He is also the Portfolio Manager of LVHD, that is the Franklin Templeton U.S. Low Volatility High Dividend Index, and is part of the Franklin Templeton Investment Solutions team that manages over $130 billion in multi-asset strategies. Michael, it's great to see you again. Welcome back to Market Site.
Great to be here.
Let's talk about today's market. Certainly very different than when we met a couple of years ago. Can you take a moment to walk us through the macro environment and key challenges that investors are facing?
Sure. I mean, it would not be an understatement to say that this is probably one of the most uncertain periods for global markets in most people's lifetimes. There are three major market challenges right now. We're seeing global economies around the world slow at the fastest rates in over half a century. Right after the COVID boom on the upside, now we're seeing a lot of that unwind in terms of a slowdown. Now, what we're also seeing is a major acceleration of inflation. Now, and again, something else that's been dormant for decades, and that's spurring central banks from around the world to raise interest rates at a very fast pace. And finally, geopolitics. You know, the last couple of decades, we've had the benefits of the peace dividend. You know, the end of the Cold War, a period of free trade and open markets, that's now broken with a new Cold War starting between China and the US, as well as a hot war with Russia and Europe right now.
Let's talk about the ETF specifically, LVHD. What is its intended outcomes and how are these particularly relevant in today's market?
Yeah, so there are two outcomes that LVHD tries to aim for. So one is providing high income through exposure to dividend paying stocks, and the other is to provide less equity market risk to essentially get exposure to more defensive equity companies. Now, the reason we look for high income securities is that's extremely important, particularly during inflationary times. During inflation, other fixed income opportunities where you traditionally get income are usually challenged because they can't pass the cost of inflation down, right? With an equity, a lot of companies can still pass the cost on to consumer, providing dividend equities to be a really attractive place. And then the other outcome around volatility is really important right now because volatility can sometimes make investors make poor decisions. You know, they might exit the market at the wrong time. And what we've seen through history is in bear markets in particular has some of the biggest equity market rallies. So the idea of giving people a smoother ride with less volatility is really important. So we help investors not try to time at the bad moment.
What's the philosophy behind LVHD and what makes this strategy unique?
Yeah, so when we designed LVHD, there were really a couple of things that we were looking at. So we found that there were a lot of what's called single factor products in the market, things that just focus solely on dividends or solely on low volatility. And we really felt that these factors are actually complementary and actually built on each other. So the unique aspects of LVHD is that we bridge a couple of these different things. So on the dividend sustainability side, as many investors know, when you chase for yield, sometimes you can wind up in a value trap or taking on more risk than you thought. So we try to circumvent that by adding profitability screens, earnings screens to the process to make sure that the companies we're invested in are going to continue paying dividends out for the long run. And on the volatility side, a lot of low volatility strategies are just purely statistical. So it says if this company was historically low vol, then we're going to put it in the portfolio. By bringing in some fundamentals like profitability, earnings, and dividends, it brings that fundamental approach to the product as a whole.
So with low volatility, high dividend focus, how do you see this fitting in a client's portfolio?
Yeah, so there are three ways that we can see it fitting into the portfolio. So the one is to bring down overall portfolio risk. So investors that want equity market exposure but are a little bit more conservative and don't want to take as much volatility, this tends to be a very good core. You know, since the product was launched back in 2015, we've had 5 greater than 10% market corrections, and LVHD has outperformed in 4 out of 5 of them by an average of 500 basis points. So definitely can get that downside protection. The second way we see people using it is a value complement. So defensive equity dividends is a very different kind of value. So it tends to style box with value, but it behaves very differently. So it's a really good diversifier. And what you find is these companies have even greater negative correlation to growth. So it ends up being great at the overall portfolio level. And the third way people use it is for income. You know, a 3 to 4% dividend yield, which is what LVHD and the suite typically provides, is still really attractive, even with rates going up right now. So people who utilize income models, you know, find this as an attractive investment.
All right, Michael, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.